welcome to another Major Market Movements End of the Week Market Review for October 2nd, 2015. I'm Quad G, and in this video we're covering the PM complex, starting off here with gold. I'm starting off this series with the TradingView charts because I don't know if you've noticed, but some of the data for the net Dania charts has been very spotty, sporadic, not coming in like it should, and really it has been giving me some pretty odd behavior now and again. So I'm not counting on it as being very reliable right now while it's going through its fits. So the time being, I'm going to do my best to present uh, my normal course of charts here using the TradingView charts. And so it might be a little bit out of order, but we'll cover the important sections, parts of the analysis that I typically cover. First off, we're going to take a look at the QG3, which is the blue line in the middle. Is the 20 DMA. Green line is the 10 EMA, and then the orange line is the 3 EMA. As you can see up here, here's orange for the 3, green for the 10, and blue is the 20, which also happens to be the center point of the Bollinger Bands as well. And the Bollinger Bands, obviously, the top rail is the upper Bollinger Band. The bottom here is the bottom Bollinger Band. And what I can see here is with the Bollinger Bands kind of just flattening out here, where it's telling me that we're in this consolidation period and we don't have a really clear trend, whether it's uptrend or downtrend right at the moment. And we're just buzzing right through the 20 DMA left and right. And again, today we just see the 20 DMA completely ignored as a resistance and just blown right through to the upside. So again, another indication that we're in a trendless sideways movement for now. And obviously things could have changed today, but it'll take some further evidence before we can really say that we've started a major new uptrend. This is a pretty good start, though, I should say. That today's candle is a very robust outside key reversal engulfing candle, engulfing 1, 2, 3 previous negative days here. So very bullish end of the week, and it does set that low of that candle, the shadow of that candle. That low is at 1104.49, and so that's a very key level of support. It could be a breakdown point if the price was to double back and break below it. I think more than likely the bulls would capitulate, sell off here, and the bears would obviously take advantage of that and push the price lower. So I think a very key level of support right there at 1104.49, 1105. But in the meantime, with this strong candle, I would expect some fall through to the upside going into next week. Probably come out to test the upper Bollinger Band at least, which is up here at about 1150. Let's move along. Here is the RSI and the MACD all together on one chart. Also want to point out that the price is being batted back and forth between these two key trend lines here. The lower trend line has been tested once. I would call it once, twice, three, a fourth time, which didn't break down. And the upside has been tested once, twice, three times, coming up on a fourth time. So the compression here is building up energy and will allow for an impulsive move to the upside or the downside, I would say in the coming days or even weeks. Obviously a break above the upper trend line here and above the last swing high, which was at a high of 1156. We break above those levels, I think it's going to be a good cause for a stronger advance, at least up to 1180, maybe even higher. Um, and then a breakdown, I think today's low, and there at 1104.49 is a very key level of support. You break below that, and I think it's gonna, you would see this energy released to the downside. So nothing really certain yet, but I think it's fine to be long to the upside at this point in time in case we do get that rule of 4 breakout. The RSI here is just trending sideways in between the neutral zone between 40 and 60. So just neutral there indication. And the MACD also neutral with the signal and baseline just traveling very close together, not really open in one particular direction. So neutral there. And let's move along to the EWO here. Again, parking the day very close to the zero line. Again, just very neutral picture. This is gold on the weekly chart, and the week does close as a bullish hammer candle. Again, reinforcing the importance of that key low at 1104.49. Yeah, but I also want to say that even though this is a bullish hammer candle, it's not particularly in the best position. It's in the middle of a bunch of previous congestion. That's not the ideal placement for a hammer candle. It would be far more preferable to see that kind of hammer candle take shape at the bottom of a pronounced downtrend instead of in the middle of this congestion. So can we see in advance? Can we see some follow through to the upside off of this? Absolutely, but the probability points should be taken off, reduced at some point for that, simply because it is inside a bunch of range bound movement there. I'm trying to see if there's any ideal example of this in the past real quick, and nothing's really popping up to me right at the moment. Like here's the ideal placement of a hammer candle, and I'll zoom in on it. Right here, hammer candle right at the end of a prolonged downtrend. That's just perfect territory for a hammer candle, and you can see that set a key low there at back in 2012, May of 2012. That low was at 1526, and that was responsible for helping the price push up higher and almost testing 1800 over the course of several weeks and even months going forward. So, but just none of a hammer candle in the middle of congestions not really showing up on my radar here at the moment. So I'm not going to spend a whole bunch of time with that. I guess you could say here's a pretty good example here, I suppose. Let's zoom in on it if I can get this thing to move. Okay, here's a inverted hammer candle. You can see here. Again, not in the best of placement in the middle of a bunch of previous congestion. And you see it didn't get any follow through to the downside. It actually popped back up, and you saw a run back above the top of the candle, the hammer handle there, which had a high of 1215, and you see that was busted. So could the same thing happen here? Absolutely. But for now, we've got a good position to the long side. Might as well just hang on to it and see what we get next week. Okay, here's the short-term LE wave count zoomed in on the 4-hour chart here. It does look like wave A is finished. Could this be something else? You know, it looks impulsive to me, and it does have enough wave structure there to support an impulse to the downside. But I think you could reasonably pick it apart and suggest that it's a zigzag to the downside, but you don't really have an outlying wave B. So it takes points off of that. So I'm gonna call it an A for now, but it could be something else. It could be, I don't have that count in front of me right at the moment, but I have considered this being a wave A here, an ABC up for a wave wave B, a wave C, maybe a wave D here, and we're popping up into a wave E of a bearish contracting triangle count. That's another possibility. Obviously, a break above 1156 would deny that bearish triangle count and would foster a more bullish count to the upside. If this count is true with an A down, then this can only be a wave B up, and then we still need a wave C down to finish wave B with a three-legged, more than likely a three-legged flat correction for B, and then another push higher. So again, wait and see. I do think we will see some fall through to the upside at least, maybe into the mid 1140s, and then it may be another decision time for the market. Okay, and let's look at this slide. Here's a longer term count for gold that I'm still working with here. Wave A or wave B is a 335 contracted flat, and we've got a wave 1, wave 2 sharp, wave 3 down, and now we're working on this prolonged flat wave 4. This count would likely be in jeopardy or killed altogether if the price was to come up above 1232. And we're still a ways from that, but so um, while we're below that level, I can still see the potential of this prolonged wave 4 flat taking shape. Wave A of that 4 flat does not appear to be finished yet. We could see another. I'm expecting another push higher into wave C of A, and that could be what we're working on right now. Okay, so let's go ahead and take a look at silver. Hold on a second. I'm gonna take this and we're gonna drop that. Okay. All right, so let's back up here to the Bollinger Bands and the QG3. Okay, so the QG3 was in a slight bearish alignment to the downside just yesterday, but this push to the upside swings it. And if you can see it there, I'll zoom in on it. You can see that the Bollinger Bands, or excuse me, the QG3 moves quickly back into a bullish alignment with this huge move to the upside. So we get a complete reversal off of that signal, unfortunately. And it's all because the market's simply not treating the 20 DMA with any respect, just chopping all the way through it. So it's hard for the QG3 rule set trading method to generate any good moves while the market is putting in these types of fits. Could this be the start of a bull run? Absolutely. So that's why we need to respect the rule set, and when it calls for to go long or short, it's just automatically obey it like a robot. But over the course of time, it has shown to be profitable. So I think again, if with the shot to the upside in silver, if the 20 DMA is respected with any pullback as support, then there is a good chance that we could actually see some fall through out of this jumbled mess to the upside. So we'll see what the market will give us. I'll go ahead and move along here. Here's the weekly chart. Again, much like gold, we got the hammer candle, but also just in the middle of that previous congestion. And but it does set a key low there at 1438. Here's the RSI and the MACD. Again, the RSI right in the middle of that 4060 range is neutral. MACD is also closed out neutral. So a very neutral picture there. Why do I have gold here? I don't want gold here. Oh, that's what it was. I was looking for. I was setting up the EWO for silver, and just needed to turn that over. So anyway, the EWO for silver is also very neutral, parking right next to the 0 line. And silver on the short-term Elliott wave picture looks to me as though we have wave A, wave B, working on a 5-wave move for wave C, which isn't complete yet, with a wave 1, 2, which is a 335 expanded flat, wave 3, wave 4 sharp looks finished as expected, and now we're working on this drive to the upside into wave 5 of C, which I think it's probably, there might be enough momentum there to get right above the extent of wave A to make this an expanding flat, 3 through 5 expanding flat. But then if this count is correct, then it may just buckle right back over once we take out the top of wave A. A move above 1600 may change the picture entirely. $16. We get above that level, and it could allow for a stronger run to the upside, and I'll show you why in this next slide. Here's the longer term silver correction with a wave 1, 2, flat, wave 3, wave 4 sharp, and now we're working on the final fifth to the downside. Wave 1, wave 2 sharp, wave 3, still working on the flat 4 here, but this blue trend line, it's already been tested 3 times already, once, twice, 3 times. So if this comes up, and you can see currently that trend line's up here and just above $16, we see a solid break of that trend line. I have to leave open the possibility of a potential rule of 4 breakout, even though it doesn't fit the Elliott wave picture. So we'll have to wait and see if how the market behaves once it gets up to that point. But for now, I do think we're just coming up into the final leg of wave C here, and then from there we may get one more push down into the final fifth of wave 2, and then once that's complete, I think we could have a very major bottom here in the silver market, and we could see a very major wave 3 rally to the upside that could go to extremes that probably most of the world is not prepared for. All right, so that's it for silver, and we'll go to GDX. So here's GDX, and much the same count as silver. Let me back up here. I'll go back here first. Take a look at the QG3 and the Bollinger Bands. It's been dancing around through the 20 DMA, much like gold and silver as well. And today, with the push up to the upper Bollinger Band, we are back into a bullish alignment to the upside for the QG3, for the GDX. So that's looking bullish. RSI and MACD, again, much like gold and silver, just in the middle of this neutral range between 40 and 60. MACD, however, is opening up to the upside, so that's bullish. Moving into a bullish alignment there. Here is the weekly chart, and we close as a outside Q reversal over last week's negative candle. So that's bullish, setting a key low at 1319. But again, this weekly candle is also in the middle of a bunch of congestion, so just got to take a few points off of the probability of producing the kind of follow through that you would expect off of such a candle. I am still encouraged that previously with these previous sell-offs here and these huge negative volume numbers that we've seen previously in these previous weeks, I'm encouraged that maybe the market has finally sold out, is completely done with its capitulation, and that's leaving plenty of room open to the upside, since those that had positions are previously up here have sold out. They don't have any powder or any positions left to sell against a upward move. And here's the long-term count for GDX. Let me move out here. Wave 1 I'm seeing as topping out in early 2008. We saw wave A down into October of 2008, and then a corrective move up, most likely a triple zigzag for wave B, and now we're working on a 5-wave move to the downside, starting off with wave 1, wave 2 flat, wave 1, wave 2 sharp, wave 3 triangle, wave 4 flat, which alternates with the 2 sharp, another impulse down into wave to finish wave 3, blue 3, and then a zigzag up into a sharp 4, which alternates with the 2 flat. And now we're working on this final fifth here, which I'll zoom into. Final fifth, the expectation again is we got wave 1 here, wave 2 sharp, wave 3 finished, working on ABC, wave 4 flat, which isn't finished yet. And then from there, another push down south into wave 5 of 5-2 to finish a major wave 2 correction, multi-year wave 2 correction, and from there a multi-year massive shot to the upside in a major wave 3 of potentially epic proportions. So see what happens there. Here's the short term count. This is just zoomed in on the wave 3 and 4 here. This 3 and 4 is the same as this 3 and 4 here. And we're just zoomed in on here, with giving it a little bit more detail. Kind of had an oddball start here. Let me actually go to the 1 hour chart. This maneuver right here left me really confused. We had what looks like a 3-wave move to the upside, which is typically corrective, and then we had this impulsive move to the downside yesterday, and then today we see this strong surge to the upside. So this movement here kind of threw me off. I'm back to thinking that the wave C of 2 did in fact end here, finish, and we've got some kind of oddball advance to the upside. It could be counted a few different ways. I kind of favor that this is a wave 1, and then you got an A, extended B, wave C for an expanded flat, and now we're working on a wave 3 to the upside as we speak. So there is a inverted head and shoulders pattern here. Left shoulder, head, right shoulder. Right shoulder looks like it's finished, and now is ready for a challenge of the neckline here, the pink line, and a break upon that should give us enough momentum to shoot us up here into the $17 range, maybe even 18. Maybe come all the way back up to fill this gap that took place way back here in July of 2015. But then from there, there is a chance that we could see a rejection and another push down. Again, much like silver, this blue trend line here, which is being uncooperative. Do I have it on this one? Yes, I do. Okay, we'll go use this one. This blue trend line has been tested once, twice, 3 times. Actually, no, once, twice, 3 times, 4 times. This would be a 5th time. And every time you test a trend line beyond number 4, You're just increasing the probability of a breakout. So could we get a breakout right there? Absolutely. We'll just have to wait and see how the market behaves once it gets up there. Okay, and let's put that one away. I do think I did set up platinum here. There's a few charts to show you on platinum. The QG3 is still in a bearish alignment to the downside, though you can see today's candle was an outside Q reversal hammer candle. That's looking bullish, and that could allow some fall through to the upside. And I'll show you some Elliott wave counts that may allow for a strong move to the upside, maybe up to above $1,000. Here is the RSI. I didn't adjust that. Let me adjust that real quick, if you may. Just hold on a second here. Just go in here and adjust those levels the way I like them. Okay, so RSI is still down here. It's testing the 30 level. We may get a bounce off that 30 level, which is oftentimes a key level support, and bounce right back into at least the neutral area, maybe even up to 60 on the RSI, which has been a key level of resistance previously. So the MACD is open to the downside. That's bearish still. On the weekly picture, we do have the a positive divergence that has built up between this swing low here and this swing low on the weekly. So that's potentially bullish, though we're still well below the 40 level, still in this oversold territory to right into the 20 level. So we're into oversold territory. We got a positive divergence that could lend to some bullishness, and the MACD on the weekly is closed out neutral. As far as the LA wave count is concerned, there's a lot of ways of looking at this. I kind of favor at the moment that this looks like an impulse down with a 1, 2, 3, 4, 5. This looks like a flat correction, an ABC flat. We got an impulse down. We got a flat correction. So this looks like a wave 1, a wave 2 flat, and then we got a 1, 2, 3, 4, 5 to the downside that looks like it could be finished. So if that's true, this is the weekly. Let's move in on the daily. So we got wave 1, 2, 3, 4, and 5. Looks like it could be finishing up here. And that could allow for a bounce right up here into the upper 900 range, maybe all the way up here to 1030 in an impulsive run based off of today's bullish candle. So, and that's a kilo at 891.90. So that's if you wanted to get long in this market. I'm probably not going to put a formal report out on it just for the sake of I got a lot on my plate as it is already. But some of you I know like to play platinum, so this might be a good play for you to take a stab at, is get in long somewhere in here, and but set your stops below this today's low there at 891.90, and see where it goes. I think it could give you 100 points to the upside at least, maybe even more. Okay, so that completes my end of the week market review for precious metals complex. I hope you all have a great weekend, and we talk to you later. Adios.